Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth Mackenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, we don't often talk about the irritation factor of being in a trade, but and of course it's entirely unscientific. But the first trade that we're going to discuss this evening is the pairs trade that you entered into not too long ago, which has obviously frustrated you no end. And I guess maybe that's one of the reasons why you've decided to cut out of it.
Yeah, that's right. So this is the pairs trade between Rand Merchant Bank and First Rand. And we haven't actually had this one on all that long. I think it's been about 3 weeks that we've had it on. So realistically, it's not that long. We've had other trades on in the past for a lot longer than this. Yeah. But I think this is kind of comes on the back of another pairs trade that we had a while back in Pioneer and Zeta, which didn't work and also was frustrating. And we've had a couple of frustrating trades over the last number of weeks. So maybe my patience is wearing a bit thin. But I know I said last week on the show that if this pairs trade didn't start to show some sort of result soon, we'd probably look to cut it and just move on. And that's what I've decided to do this week. Look, I am still reasonably convinced that the trade will work out at some stage. I mean, it must do. We're talking about Rand Merchant Bank and First Rand, which essentially are one and the same thing, really. Rand Merchant Bank is a holding company that owns shares in First Rand. The ratio should come back together at some stage. The question really is just how long are you willing to wait? And while you wait, keep in mind your capital is tied up, your focus is tied up, and maybe there are opportunity costs because of those two things where you might be missing out other trades that you could otherwise participate in. So on that basis, I've decided to close this trade. Okay. The graph that's on the screen there is the overlay of First Rand and Rand Merchant Bank, and you can see that historically the share prices do track each other very, very closely. Recently, that relationship between them has widened somewhat, meaning that Rand Merchant Bank has become expensive relative to First Rand. So to do that, or to try and take advantage of a narrowing of that gap or a mean reversion on that gap, you do a pairs trade, and in this case it would involve going long First Rand, as we did at 49 Rand 75, and short Rand Merchant Bank, which we did at 67 Rand. We did it in 150,000 Rand each way. So we long 150,000 of First Rand, we short 150,000 of Rand Merchant Bank. The ratio that we did between the two stocks is in the middle of the screen there, 0.7425. And the way that ratio is calculated is you take the price of First Rand and you divide it by the share price of Rand Merchant Bank. And we were looking for the ratio to move up, in other words, for the gap to narrow between the two shares. It hasn't really happened. And in the end, I've decided to close it out. At the bottom, there's the result. So we've closed out the First Rand leg at 49 Rand 65, so very close to where we got in. We lose 904 Rand there after transaction costs. But keep in mind, we did receive a dividend of 3,500 Rand while we were holding the First Rand leg. Okay, and then on the right-hand side, we've closed out the Rand Merchant Bank side of this at 66 Rand 60, which is also very close to our entry level. Yeah. There we we make 290 Rand profit on that leg of the trade after costs. But we had a dividend that we paid away during the holding time of this trade of 3,446 Rand. So you put all that together, it means we lose 532 Rand. So it's really nothing in the scheme of things. But for me, it's just a case of let's get rid of this. Let's wipe the slate. Let's make space for some new trades, and let's try and get some action going, because we've certainly been lacking that over the last couple of weeks.
I mean, Garth, you talk about, you sometimes use the word time stop loss. And is that essentially what you've done here? Is that it's kind of out of time for you, and as you've explained, the reasons you're not willing to spend any more time in the trades, and that essentially is a time stop loss.
That's right. A time stop loss is where you need your price stop loss has not been hit. Your target objective to take profits has not been hit. You're sitting somewhere in the middle, and it's just taking time to find a direction. And that's exactly what we've done here. We've effectively executed a time stop loss. Something to keep in mind that I've mentioned many times on this show is that, in my experience, the best trades generally work off the bat, and you get your result very quickly. If you're sitting and 2, 3, 4 weeks later, your trade is still not doing anything for you, well, then it's telling you that the rest of the market clearly doesn't see it the way you do. So close the trade, move on, find something else to do.
Yeah, okay. And we'll talk about that something else in a minute, but let's also look at Zeda. So it's one half of what was a pairs trade, as you mentioned a couple of months ago. You went long of this without any involvement in Pioneer,
yes.
And you're still long of this.
I'm still long of Zeda. Yeah, the graph is up on the screen there at the moment. What I've shown previously are these bands of support and resistance. So we've got the big support at 7 Rand, then resistance was at 8 Rand. That became a support level, and then the 9 Rand level was another sort of fairly significant level of resistance. Now, recently what I did was I bought Zeda when it got down here to it went just below 7 Rand and it reversed up. So I went long at 7 Rand 35 with a stop loss at 6.95. And I'm looking for a move up to 8 Rand to 8 Rand 50, that sort of area. And it's been very close to 8 Rand over the last couple of days. So it's looking okay for us. What I also quite like here is the possibility that this is a little inverted head and shoulders pattern here on the right. And that does look to be validated now, which theoretically should take us up to about 8 Rand 50.
Okay.
So I'm quite content to hang on to that one. And you mentioned Pioneer Foods. One of the reasons I do like the idea of hanging on to the Zeda long is because Pioneer Foods is still a heavily shorted stock by virtue of that pairs trade that we did, short Pioneer, long Zeda. It's a very crowded short. And even though it's a crowded short in Pioneer Foods, the price is not coming down. So that suggests to me that at some stage those shorts will probably need to cover, and they're going to likely push the price up. And if Pioneer Foods goes up, Zeda should theoretically follow. And again, we're looking for a narrowing in the discount to the sum of the parts in Zeda's share price. So on that basis, I'm quite comfortable to stay long of Zeda for the time being.
Okay, all right. So you're still in that trade. I mentioned that there is another trade that you have entered into this week, and it's a long of BHP Billiton.
Yeah, it's a long of BHP Billiton. I'm dabbling in the resources space, which is admittedly where we have burned our fingers a couple of times this year and last year, in fact. So one wonders whether we're doing the right thing here. But I suspect we are. I like the look of this BHP Billiton trade setup. The resources have been a little bit flavoursome lately in the market, and we've seen some fairly strong moves up in some of them. BHP Billiton has the strongest balance sheet of all the resources counters. So I think the potential for a negative surprise here is pretty low. And what I'm looking at here really is, first of all, look at that share price graph. It has been coming down over the last number of months, but it does appear as if it might be starting to base now. And what gives me added confirmation to say that is look at the fact that the price is broken above the 50-day moving average, which is this light blue line. That is an encouraging sign. We've seen the price break above the 50-day moving average. It's come back down now, and it's doing a retest of that area. We've also got this double bottom that formed at about 203 Rand per share, and that was in August and September. And what else have we got? There's overhead resistance here at about 244 Rand, thereabouts, which we would potentially look for a rally back up to go and retest that level again, I think. And one might even say, is this potentially one big inverted head and shoulders pattern forming here? Time will tell, and we'll see.
I mean, just looking at that 50-day moving average, it's right on it.
Yeah.
So if it had to fall below that, would you say that actually this setup isn't confirmed for you and it might change the picture somewhat?
Well, it's gone a little bit below that today, but I'm not that worried about that. You know, you'll often find that it flushes below the 50-day moving average before it moves back up again. So I'm not particularly worried about that. What I am interested in is a reversal, and particularly if we look at the Fibonacci retracement numbers here. Now, this is not something we look at all that often on the show. But if we take the rally from late September all the way up to this recent rally, to the recent high of 245 Rand, you can then measure the various percentages of that pullback. And historically, typically your 50% to your 61.8% retracement level on a Fibonacci scale is what we often refer to as the ambush zone. And in this case, what it would mean is that the price could pull back into that zone, but that's likely the area where buyers would probably start to ambush sellers, or you'd look for some sort of buying activity to come in. So it's traded into that zone today. We're looking, ideally we'd want to see a reversal, but I've gone in with a small position today nevertheless based on the hourly chart, which I'll show you next, because I do like the overall look of this chart setup. And if we do get a clear reversal, maybe I'll then add to it. But I'll show you the hourly chart now. Okay. The hourly chart that I'm going to show you actually zooms in on that boxed area that I've highlighted on the graph over there.
Okay, so essentially from the end of September.
Yeah, that's it. So we go from the end of September over there. And this is 1 hour, every candlestick pattern here is 1 hour's worth of trade. there you can see that the rally that happened from the late September into early October, and now we've started to retrace some of that rally. Now, we're into that zone. Remember, I spoke about the 50% retracement and the 61% retracement. We're into that area now today. And there has been some evidence of buying around about this 220 sort of area, which is the 61.8% retracement. So on that basis, I've decided to go in long with a small position. We've bought at 219 Rand and 80 cents. My stop loss is going to be it's actually 213. I see there's a mistake on that slide there. Okay. And my target is 240 Rand, which would mean that we're looking for a move basically back up towards these recent highs over here. And you can see the risk to reward indicated by that, the red box indicating the risk and the green indicating the reward.
Garth, before we get into the greater mechanics of it, Fibonacci sequences it sounds all quite esoteric. How often do you find that these are quite sort of valuable levels or percentages that you would look to as a trader?
Yeah, Fibonacci is not something I use an awful lot, but I do keep an eye on it. And particularly, I'm not specific about it. I don't say it has to go to the 50% or it has to go to the 61.8%. But historically, what we do often find is that zone between the 50% and the 61.8% retracement, there and thereabouts, is very often where you'll find a turning point that tends to happen in a stock that's trending. Yeah. So if we assume that Billiton could potentially be starting to make a new sort of series of higher lows and higher highs, then I think this is an interesting area to be buying it now.
Okay, so in greater detail, talk us through that trade.
All right, so I've gone long at 219 Rand 80. My stop loss is 213 Rand. Risk per share, therefore, is 6 Rand 80. I'm risking 1% of our capital only, so 3,500 Rand is what I'm willing to lose if this trade goes wrong. I take that risk, 3,510 Rand, and I divide it by the risk per share of 6 Rand 80, and that gives me 516 shares. So I've rounded that down to 500 CFDs. My target is 240, and that's an initial target. We'll see when it gets there whether to hold on or not. My risk to reward ratio, therefore, is 1:3, which I'm happy with. And the exposure here is basically 110,000 Rand worth of long exposure that we've taken to BHP Billiton here.
Garth, two things. The stop loss of 213 Rand is a fairly tight stop loss, but is that because it's a resources stock that can tend to swing about quite a bit, or is any particular thinking behind that?
Well, it's more that I think if the share price was to trade significantly below that 61.8% retracement that I spoke about, then the likelihood is it's probably going to go back down to the low. So then I don't want to be in the stock if that's going to be the case. So to my mind, putting it at 213 Rand is far enough away that it's out of the way it's far enough away to tell me the trade definitely is wrong, but not too close to catch me out and throw me out of the trade, as it were.
And then risking 1% of the accounts, I mean, you know, you've got a put option structure in place, you've got the long of Zeda, but there's no other activity in the portfolio. So you are risking sort of less than normal. Yeah,
I'm risking less than normal. I suppose it's also, we've done quite well this year. I guess I'm not going out swinging too heavily. Also, this is a trade that you can still say to me, we are kind of slightly against the trend here, although the price of Billiton might be basing. It's not a clear uptrend. It's not a strong stock. So on that basis, I think I'm more inclined to not want to take my maximum risk on a trade like this.
Okay. So what does the portfolio look like then?
All right. So it's looking like this. These are all the recent trades and some of the open trades. We've got our put option structure with a premium of 1,500 Rand still paid away. We'll talk more about that as the quarter develops. The Rand Merchant Bank First Rand pair trade, we lost 532 Rand there. Zeda, we're up 6,760 Rand as things stand on that trade. And the Billiton we've just put on today. So our portfolio is just over 351,000 Rand. It's up 40% for the year to date. So we're still looking pretty healthy, even though it's been a rather lackluster ride over the last couple of weeks.
Yeah. And then just lastly, your courses next month.
Yeah, so in November, we've got a couple of courses coming up. I'm doing 2 high probability trading courses in Johannesburg on the 14th of November and Cape Town on the 7th of November. My colleague Andrew Todd runs a top 40 trading course, specifically focusing on the top 40 future. And that's a relatively new course. It's quite exciting. He's doing that on the 7th of November. So anyone that would like info on any of these courses, please email me, garth@traderscorner.co.za, and then I'll send you all the details that you need.
Okay, thanks, Garth. As always, Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.